How's it going, guys? My name is Ishan, and in this video we're going to be talking about 3 tech stocks set to double. And as always, we don't talk about generic stocks like Apple, Google, Amazon. Those are boring stocks. We only talk about stocks with real potential on this channel. So as always, if you appreciate these short and value-packed videos, make sure to drop a quick sub and let's clock in. Stock number 1 is 8x8. This is a stock I call the best stock to buy under $20 last month, and yesterday we were up a staggering 35%, and in fact today up another 9% all the way up to $31 a share. However, I don't think the rally is over just yet. This stock has a lot more upside. So they're a provider of voice over IP products. Their products include cloud-based voice, contact center, video, mobile, and unified communications for businesses. So the massive news that sent the stock soaring was that they appointed Dave Sipes, who was the former COO for RingCentral, as their new CEO. And this is huge news because at RingCentral, he took the company from $10 million to $1 billion in revenue, and so he's bringing that vast knowledge and experience to 8x8. And the fact is that 8x8 and RingCentral are actually competitors. So through this, by bringing him onto board, this just shows that the company is making smart decisions, and that the fact that they now have a leader who knows what he's going to be doing and really push growth further. But this is just one of the many reasons that this company is still going to continue to rally and even double. According to Synergy Research, United Communications as a Service, or UCaaS, is now more popular than ever with a market growth rate of 29% year over year, because as employees spend more time away from the office, UCaaS ensures that they can access the right technology. In fact, the global UCaaS market size is projected to reach $36.45 billion by 2026, or essentially a 2x from 2018. But this is just one part of their business. The second part is their call center as a service business, and this is where things get interesting. As businesses shift to operate anywhere and engage customers remotely, the demand for cloud-based contact centers has increased sharply. 8x8's products can direct customers to the best qualified agents with skills-based routing. They provide AI-based agents and bots that can answer questions, and the agent experience as well is also enhanced with connections to CRM systems and other enterprise solutions. And taking a look at 8x8's numbers overall, contact center new bookings grew 62% year over year and represented 32% of total new bookings in their last quarter. And overall, taking a look at the company's financials, they have been growing in the mid-20s to 30s range year over year each quarter, which is pretty impressive. And last quarter, which was their first actual real quarter where pandemic associated costs weren't that high, they managed to decrease their losses while at the same time increasing revenues. And then compared to competitors like NICE or RingCentral, who are trading at a massive 31 billion market cap and 26 price to sales, 8x8 is only a $3.1 billion company trading at a 4.3 price to sales. In my last video, I said that they would hit $30 within the next year, but now I'm upgrading my price target to $50 to $60, especially with their new CEO who they appointed. This company is primed for growth. The next tech stock that will double is Domo. This is another stock we've talked about on this channel so many times, so make sure you subscribe because no one else is putting out these fire and insane tech stock picks on YouTube. So make sure you subscribe and like right now. But anyways, the stock is now at all-time highs at about $47, and I believe it still has a lot of room left to run, and that's why I keep recommending it. Domo is a company that specializes in business intelligence tools and data visualization. That basically means the data a company has, whether that be product sales or team performance, Domo software creates these awesome looking charts and graphs to allow companies to visualize all of that data. They also allow you to use that very data to create predictive models using AI, so you can forecast things like future sales and a lot of other important stuff that these businesses need to predict. Big data spending has literally ballooned. In 2019, our spending was 180 billion, and literally in 2022, that spending is going to be 270 billion dollars. So the market opportunity is there. Companies are spending on data as they become more data centric. Domo will continue to be able to sign on new clients as a result. They already have an impressive client base, which includes Cisco, eBay, ESPN, DHL, Zillow, and Dell, and the list just goes on and on. Taking a look at their financials, each quarter they're currently growing at close to 20% year over year, and they recently smashed earnings, sending the stock soaring over 20%. Revenue beat by nearly 2 million and EPS beat by 4 cents. At a only $1.3 billion market cap and only 6.4 price to sales, even though I recognize that their growth is slowing, this is a company going nowhere, and so within the next year I believe that this is a company going to be hitting $70 to $80 a share. Last but not least is Elastic NV. This is a stock I've been continuously calling a screaming buy since it was at $80 a share, and now after an amazing earnings beat we're at 140, but still this stock is extremely undervalued. Elastic has a few products, all which revolve around search engines. Their main product is Elk-Stack, which is a game-changing open source tool. Elk stands for Elasticsearch, Logstash, and Kibana. Logstash collects and transforms the data, Elasticsearch allows you to search through all that data easily, and Kibana is a tool that allows you to visualize the data by creating all these cool looking charts. And again, this is a super powerful tool because companies have thousands and thousands of logs, thousands of data files, all of that. And so whether going through that manually or creating their own tools, that's just not worth it. And so that's where a tool like Elastic comes into play, where companies can use that tool to monitor that data and analyze it. And their earnings show the demand. Revenue grew 43% year over year to 144.9 million last quarter. And now they have over 650 customers paying greater than $100,000, and then their net expansion rate was 130%, meaning current customers are paying 30% more than they were a year ago, and that's something you have to like. Each quarter they're growing close to 50%, which is insane. They're expecting to grow at 25% next year, which I believe they will easily beat, because as we saw with Splunk, whose numbers were terrible, Datadog and Elastic, these companies which I've been recommending for the longest time, are replacing Splunk. Because Splunk is expensive and companies like Datadog and Elastic offer cheaper and even potentially better solutions, and that's why you can see companies like Splunk having massive decreases in revenue, whereas companies like Datadog and Elastic are seeing tremendous growth. This is a $12 billion company that by 2025, if we can stay above 20% growth year over year, will be doing 1.2 billion in revenue per year, and you best believe it's going to be worth at least double what it's worth right now. So make sure you like and subscribe, and let me know down below what you guys think about these picks. Do you plan to buy or any other stocks you guys are watching? These are some fire tech stocks that will double. So make sure you like, subscribe, do all that good stuff, and I'll see you guys next time. Take it easy, clocking out for now. Peace.